Hello students, welcome to BYJU'S IAS. Welcome to a session on economy this week, wherein we'll be taking up some of the very important articles and we'll be analyzing these particular articles. For this particular video, I've chosen the time period from 2nd to 8th of November 2020, and the articles that I've chosen are from Business Line, Hindu, Business Standard, Indian Express, and Livemint. Let's begin the discussion. The first article is related to GST revenues. Now, some of the very important points related to this are: from February 2020, the GST revenue collections have been lesser. It was in this particular month where the GST revenue collection crossed more than 1 lakh crore rupees. And after this, for successive 6 to 7 months, the revenue collections have been much lesser or have been declining. But for the month of October, the GST revenue collections again have crossed more than 1 lakh crore rupees. And this made the headlines. Now, rather than looking at only the number, that is GST revenue collection of more than 1 lakh crore rupees, understand the implication of this particular number. The important implications are: 1. With the pandemic, the tax receipts of Government of India have declined, and even today, the tax receipts under the direct taxes are much lesser. But the indirect tax collections for the month of October have increased, specifically because of the GST, because of excise. This is a good news for Indian economy as well as for Government of India. That's the first very important implication. Second, with the pandemic, the expenditure of Government of India has increased. And when there is an increased expenditure, obviously there is a requirement of higher revenue collection. And this particular news of GST revenue collection crossing more than 1 lakh crore rupees is a very good news in this particular context. Third very important implication: the GST revenue collection not only go to the central government but also go to the states also. And in the recent times, the finances of the states are under a lot of pressure. And this particular news of higher GST revenue collection is a good news for the state government finances. Fourth very important implication: with higher GST revenue collection for the center as well as for the states, the burden of the central government to pay GST compensation in case of a GST revenue shortfall is expected to come down. Fifth and the most important implication with respect to this higher GST receipt collection is that, as we all know, GST is a consumption based tax. Unlike earlier VAT system where it was based on the production, GST is a consumption or destination based tax. In simple terms, higher the GST revenue collection, it signifies that there is a higher demand for the goods and services in the market. And this is a very good news for a simple reason: higher GST revenue collection also indicate higher demand for goods and services in the market, which indicates that there is a economic recovery that is taking place. Now, although this indicates a higher demand for goods and services, please understand, Government of India is saying at a larger level, this indicates economic recovery for a simple reason. In addition to higher GST revenue collection, the consumption or the demand for electricity has increased. Railway freight usage for transportation of goods and services has increased. The sales of cars also has increased. The demand for car loans also has increased. All of this put together, Government of India is basically stating that there is an economic recovery that is taking place. Having said so, some of the experts have raised a certain concern with respect to even this particular GST revenue collection. Their argument is this particular GST revenue collection is because of the pent-up demand. What is the basic idea of a pent-up demand? During pandemic, especially post-March in case of India, the demand for goods and services has actually come down. For a simple reason, during this particular period of uncertainty, the households whose earnings were also becoming lesser and lesser have reduced the consumption of goods and services, and they have basically postponed this particular decision to consume goods and services for a later period. Various experts are saying that this particular increased GST revenue collection for the month of October is because of this particular demand which has been postponed, and in the month of October there is unusually higher demand for these particular goods and services. This is one argument which has been put forward by various experts for this particular higher revenue collection. And second argument that they have raised is with respect to festival sales. They are saying that This particular increased consumption or demand for goods and services is because of the festivals in the month of October. Having said so, the government of India stated that the festival mainly came in the month of November. Hence, the GST revenue collection for the month of November would be generally higher because of the festival sales. For the month of October, there was not too much of impact of this particular festival sales on the consumption of goods and services. So these are some of the very important points related to this particular article. Based on this, I've given a question here. Consider the following statement regarding pent-up demand. It represents a situation where the demand for goods and services is unusually strong. This particular statement is correct. This represents the definition for a pent-up demand. It is often seen after recession or depression. Now, just to give you an idea of the pent-up demand, you must have heard of a Z-shaped recovery. Now, generally what happens in Z-shaped recovery is this. If y-axis is the GDP growth rate and x-axis is the time period, if the economy is supposed to grow in this particular fashion, but because of a recession, what will happen? GDP growth rate will take a hit, fall down like this. After a certain period of time, there is a sudden increase in the demand for goods and services, as a result of which there is a higher GDP growth rate. But again, it will correct its course and go to the normal growth path like this. This particular GDP growth phase or the shape of recovery is called as a Z-shaped recovery. And generally, in case of Z-shaped recovery, what we see is once the economy incurs a recession or depression, there is a sudden rise in the demand for goods and services. This generally is because of the pent-up demand. And generally we say that pent-up demand follows a recession or a depression. So even this particular statement is true. So both the statements are true. Right option is option C. Both are true. Next article is with respect to RBI accountability. Now first and foremost, understand this. RBI, under the concept of inflation targeting concept or the Monetary Policy Framework Agreement, which was signed between the Finance Ministry, or to be more precise, Government of India and RBI, is supposed to maintain inflation rate at 4%. But rather than giving only 4% target rate, Government of India has relaxed this particular target rate on either ways. That is, either RBI can allow the inflation rate to move up to 4% plus 2%, that is up to 6%, or fall up to 4% minus 2%, that is up to 2%. In simple terms, yes, as per inflation targeting, RBI is supposed to maintain inflation at 4%. And when I am referring to inflation here, I am referring to retail inflation, that is CPI, Consumer Price Index. But RBI cannot always maintain inflation at 4%. So rather than actually giving a fixed target of 4%, Government of India has given a relaxation either side like this, that is of 200 basis points. In simple terms, RBI can allow inflation target to reach up to 6% or fall up to 2%. Now, within this particular concept of a monetary policy framework agreement, it also states that if the inflation crosses more than 6% for 3 consecutive quarters or falls below 2% for 3 consecutive quarters. I'll repeat the statement so that it is very clear for you. If the inflation crosses more than 6% for 3 consecutive quarters or falls below 2% for 3 consecutive quarters, then RBI has to give a written explanation to Government of India. In this particular written explanation, RBI has to mention 3 very important points. First one, what are the causes of this particular inflation rate? Second, what reforms would be taken or what measures or steps would be taken by RBI to bring it under control? And the third, within what time period RBI will be bringing this particular inflation under control? These are the 3 very important clarifications that RBI is expected to give to Government of India in case the inflation crosses or breaches the target levels. Now, in the current affairs, what has happened? For the 4th quarter, in the financial year 20, inflation rate was more than 6%. For the first quarter as well as the second quarter in the current financial year also, the inflation has been over 6%. To be more precise, for these particular 3 quarters, inflation has been in the range of 6.6% to 6.9%. Now, citing this, various experts are saying this simply means that RBI has to give a written explanation to Government of India, because in 3 consecutive quarters, the inflation rate has been over or has breached the 6% target level that the RBI is supposed to maintain. So, RBI is supposed to give a written explanation to Government of India. But various experts are also saying that Government of India may simply give an exemption, right? RBI, rather than giving a written explanation, Government of India might simply ask RBI to not to give any kind of a written explanation. This article says that this basically goes against the concept of holding RBI accountable for this particular inflation rate in the market. Because the article says that when Government of India gave 4% inflation target and also gave a relaxation of 200 basis points on either side of this particular target, it simply means Government of India accounted for the volatilities in the market, because there will be certain issues, certain time periods during which there are certain events which are beyond the control of RBI as well as the Government of India, which will basically lead to inflation crossing more than 4%, going up to 5% or falling up to 3%. So when RBI is given this particular flexibility in the inflation target, it simply means Government of India has already accounted for these kind of volatilities in the market. And RBI is expected to say that this kind of volatility has happened on the background of the data collection problem that it has faced. That is, during a month of April as well as May, what has happened is the CPI data was not collected because of the lockdown. There was problem with respect to data collection, and because of this, there were estimates of CPI done based on certain proxies. So during this particular period, inflation rate which has been more than 6% is not based on the absolute data or the exact data which is supposed to be collected. And this is supposed to be one of the arguments which is supposed to be given by RBI to Government of India for the reason of a higher inflation rate during this particular period of the last 6 or 7 months. So barring this, the article basically says Government of India should go ahead, ask for the explanation from RBI, and RBI in turn should give the explanation and also explicitly mention what is the support RBI is expecting from Government of India to rein in the inflation or control the inflation, bring it at around 4%. This will not only increase the transparency in the system, it will also increase holding RBI accountable to the Monetary Policy Framework Agreement which has been signed and which is under implementation. So this is the basic gist of the article given here. Based on this, I have given a question here. Write a note on Monetary Policy Framework Agreement in 250 words. Now, just to add one point here, very recently there has been a lot of discussion with respect to this particular inflation target within the Monetary Policy Framework Agreement. As already mentioned, inflation target has been given at or has been fixed at 4%, and as per MPFA, Government of India once every 5 years will decide on this particular inflation target. Now, various experts are saying, since this particular inflation target has already been used, why doesn't Government of India look into this particular inflation target and change the inflation target? And second very important point that the various experts are mentioning is, rather than looking at headline inflation, why don't we shift to core inflation and fix this as an inflation target? Now, for those of you who do not know the idea of a headline and core inflation, in case of headline inflation, what we do is basically consider all the basket of commodities. For example, under CPI, rather than taking CPI, I'll take WPI here. Under WPI, there are 697 commodities in the basket. Now, if I take all the 697 commodities and calculate the inflation, this is called as a headline inflation. We calculate headline inflation for both the WPI as well as CPI, and it is the headline CPI which is used as a inflation target, or it is used for inflation targeting. But various experts are saying rather than headline inflation, core inflation is a better indicator. Now, what is a core inflation? Out of this particular 697 articles, there are certain commodities or certain articles which will fall under the group of food articles and fuel commodities. Now, why these two groups are very important? In case of Indian economy, in the last couple of years, if you have seen the trend of inflation, the inflation has been caused because of food as well as fuel commodities. Especially in the recent times, this particular group of commodities has been the culprit, has been the main contributing factor in terms of a higher inflation rate at the retail level. But based on this particular food inflation rate, which is causing the CPI headline inflation, RBI is choosing to change the interest rates in the market. But the food prices will keep on fluctuating in the market. In the recent months itself, there has been a lot of fluctuation in terms of food prices. RBI itself in its recent report has stated that this particular higher food prices is a transient in nature. That is, it is temporary in nature. So based on the temporary fluctuations in the food prices, we are determining the interest rates, or we are changing the interest rates according to that. That is the argument which has been put forward by various experts. They are basically saying that in case of core inflation, we will basically exclude these kind of commodities whose prices fluctuate at a very great level, or whose prices fluctuate very fastly or very quickly in the market, so that a better indicator of inflation level in the market can be obtained by calculating core inflation. Their argument simply is, since we are using headline inflation, and the headline inflation is being caused because of these kind of commodities which will fall under the concept or under the basket of food as well as fuel, we are making changes to the interest rates. For example, RBI changes repo rate, RBI changes CRR, SLR, so on and so forth, based on the headline inflation, that is CPI headline inflation. So the experts are saying, rather than using this, why don't we use a core inflation? So this is one very important point of discussion that is happening with respect to monetary policy framework agreement in recent times. Now the next article is with respect to commercial papers. Now in the newspaper article, not much information is required for UPSC. Most of it is very technical in nature. But what you need to understand is the concept of a commercial paper. Generally in the UPSC prelims, these kind of questions are asked by UPSC. Now what is the basic idea of a commercial paper? Please understand this. A particular company can raise money by issuing debt instruments, by issuing equity instruments. For example, the company can sell commercial papers in the market, company can sell bonds in the market, company can sell debentures in the market and raise money. But essentially in case of a debt market, what happens? The company which has collected money today will have to repay this particular money. And that is a basic concept related to the debt market. Whereas in case of equity market, same company can raise money by issuing, let's say, shares. But the objective under this particular concept of equity market is there is no liability in the future. The company need not have to pay the money in the future. If it is issuing 100 shares and if you are purchasing 10 shares out of these particular 100 shares, you become 10% equity holder or 10% owner of the company. And since you are owner of the company, there is no question of a repayment of this particular money in the future. So that is a basic idea of equity market and debt market. And within the debt market, I am focused on the concept of commercial papers, which is there in the newspaper here. In case of commercial papers, these are promissory notes which are issued by companies. Now, when I am saying companies, please understand this. Not any company in India will be allowed to issue the commercial papers. RBI guidelines are there, which will basically ensure that only certain number of companies which will meet the guidelines which are set by RBI will be allowed to issue commercial papers. But one of the very important guidelines which has been issued by RBI is there is a credit rating requirement in case a particular company is allowed to issue the commercial papers. There is a certain amount or certain level of credit rating that is required. Only after that, or only those particular companies which have this kind of a credit rating will be allowed to issue the commercial papers. So first point here is, so these are nothing but promissory notes which are issued by the companies. Usually will have a tenure or maturity period of up to 1 year or less than 1 year. These are issued usually to get the working capital for the companies, and the maturity period ranges from 7 days, minimum 7 days. So these are some of the very important points related to concept of a commercial papers. Now why it is there in the newspaper? It is there in the newspaper for a simple reason. Recently, more and more companies are issuing commercial papers and are raising money. Now, the idea here is companies can borrow money from a bank, that is basically for working capital or for investment purposes. They can borrow from a bank, but they will have to pay a certain rate of interest to the bank. Now, the companies have realized that the rate of interest or the coupon rate which they are supposed to pay on the commercial papers has become lesser than the rate of interest which is charged by a bank, and many of the times this has become lesser than the repo rate, overnight repo rate in the market, or the yield rates on the overnight repo rate in the market. And basically these particular companies are leveraging this particular situation and they are issuing more and more commercial papers and they are raising money from the market for working capital purposes. So this is the gist of the article which you're supposed to know. Lot of data has been given in this particular article, that is from one month to another month how many commercial papers have been issued. That is not important for UPSC exams. What is more important for you to know is simply this: companies can issue commercial papers and raise money from the market for working capital purposes. Why this is important? Understand this. In case of India, usually we have different types of markets from where the companies can raise money. There is a bond market, there is a commercial paper market, so on and so forth. Generally, it is seen that in case of the bond market, it is the NBFCs which are dominating in this particular market. Whereas it is various companies which are basically getting this particular loans or getting this kind of a borrowing from the commercial paper market. But more importantly, more and more issuance of the commercial papers, it simply means companies will have another source of raising money over a period of time. And this will basically lead to what? This will basically lead to debt market becoming more and more mature, which is actually required in case of Indian market. Because please understand, most of the debt instruments which are issued in the Indian market are basically issued by the central government as well as the state government. For example, if you look at the bond market in India, majority of the bonds which are issued, these are, again, bonds are nothing but debt instruments only. Majority of the bonds which are issued in case of Indian market are by the central government as well as state government. And the participation of the corporate sector or the private sector in case of bond market is not very high in case of Indian market. That is the reason very often you will look at one statement or you will come across one statement where they will say the bond market penetration is very, very poor in India. Or else, to be more precise, they will say corporate bond market penetration is very, very poor in case of India. If you compare, let's say, a country such as USA, wherein the corporate bond market is much, much higher, that is in simple terms, compared to government bonds there, corporate bonds issuance is much, much higher, that is in the debt market. Whereas in case of India, exactly vice versa. In case of India, the government bonds are much, much higher in terms of value compared to the corporate bonds. So this is the basic discussion that you're supposed to know with respect to the commercial papers. Based on this, I've given a question here. Consider the following statements. Commercial papers can be issued by any of the companies in India. Wrong. There are certain guidelines. All the companies are not allowed to issue the commercial papers. Second, commercial papers will have a maturity period of minimum 28 days. No, minimum 7 days. So both the statements are wrong. Right option is option D. Both are false. The next article is in relation to National Anti-Profiting Authority. First and foremost, what is the idea of a National Anti-Profiting Authority? Government of India introduced GST, and with introduction of GST, there was over a period of time rationalization of the GST structure. That is, in simple terms, many of the goods and services which were covered under a specific GST tax rate or a tax slab were shifted to another tax slab over a period of time. And in majority of the cases, what has happened? From the higher taxation slab, these particular goods and services have been brought under a lower taxation slab. For example, if there is a particular commodity X, earlier if it was a taxed at, let's say, 18% under GST, now it has been brought under 12% GST. Now, what is the connection of this with the concept of a National Anti-Profiting Authority? Government of India basically says that under the ambit of GST, companies are allowed to profit. You are allowed to make a profit, but you are not allowed to profiteer. I'll repeat the statement again. Under the ambit of GST, companies are allowed to make profits, but they are not allowed to profiteer. Now, what is the basic difference of a profit and profiteer? If a particular company or a seller is making unreasonable profits, if he is making unreasonable profits, that basic concept is referred to as a profiteering under the ambit of GST. Now, how the companies or sellers are making unreasonable profits? For example, take the commodity X. If the commodity X, the cost of this particular X was let's say 100 rupees, and the seller is about to sell it in the market, and earlier if the GST rate was 18%, then the market price will be how much? 118 rupees. Now, if Government of India has reduced the GST from 18% to 12%, then the seller is also supposed to reduce his selling price from 118 rupees to 112 rupees, because the cost price still remains the same. GST has reduced to 12%, so 12% on 100 rupees, the selling price should automatically come down to 112 rupees. What Government of India says is, If this particular seller reduces the price, let's say from 118 to 114 rupees, on paper, yes, he has reduced the selling price and he is transferring the benefit of rate reduction to the consumer. No doubt that is happening. But Government of India uses a term called as commensurate rate reduction. What do you mean by commensurate reduction? Commensurate simply refers to appropriate reduction in the market prices. In simple terms, what government says in this particular context is when the GST rate has been reduced from 18% to 12%, the selling price should also reduce from 118 to 112 rupees. If the seller has reduced the prices like this, then the government says there has been a commensurate rate reduction with reduction in the GST rates. This is what Government of India says. And if he has not reduced the prices by this much level, then it simply means he is profiteering. So to counter this particular profiteering activity, Government of India introduced a National Anti-Profiteering Authority. And this particular National Anti-Profiteering Authority was set up in 2017 and was supposed to function till 2019. That is, specifically, there's a term called as a sunset clause. Sunset clause basically refers to application of a provision for a specific time period. I'll repeat the statement here. Sunset clause basically refers to application of a clause or a application of a provision for a specific time period. For example, if Government of India sets up an authority today and says a sunset clause of a 2 year, then automatically after 2 years, this particular authority will cease to exist. It will stop the operation. So this particular National Anti-Profiting Authority was set up in 2017, had a sunset clause of 2 years, but this particular sunset clause of 2 years has been extended by 2 more years. In simple terms, it will continue to function till 2021. Now, what is the authority or what is this particular function of this particular authority? The National Anti-Profiting Authority is supposed to ensure that there is no profiteering activity in the market by the sellers or manufacturers. The National Anti-Profiting Authority can take up the cases suo motu, or the consumers can raise the complaint against the profiteering activities of the sellers in the market. Now, beyond this, what you're supposed to know is, in case the authority finds out that a seller is actually profiteering from the business, then basically there are 2 outcomes here. One, it can simply ask the seller to make the repayment, and in extreme cases, this particular authority can cancel the license which has been issued by the government to this particular manufacturer or seller in the market. Now, in case of repayment, again there are 2 situations. If you can find the consumer or customer in the market, for example, you have purchased a car, so you know who is the customer in that particular case. If there's a profiteering activity, whatever is the excess profit that you have made, you will have to make it in the form of a repayment to the customer. But in case of a certain goods and services which are supplied in the market, for example, purchasing a coffee, purchasing soap in the market, purchasing powder in the market, in that particular instance or in this kind of a transaction, you are unable to find out who is the actual consumer from whom you have collected excess amount of profit. In these cases, this particular person or this particular company or a seller who has made profiteering has to make this particular contribution to consumer welfare fund. Whatever is the excess profit he has made, unraisable profit he has made, he has to contribute it to consumer welfare fund. These are certain very important points. Now, based on this particular discussion, have a look at the article here. Nothing much to understand here. In simple terms, what has happened is one of the companies, Starbucks, has increased the prices of a certain type of a coffee that it sells to the consumers. At the time period when Government of India, or to be more precise, GST Council reduced the GST rate which is applicable on such a kind of a coffee. Now, there has been an investigation by the National Anti-Profiting Authority, and the authority has concluded that this particular company has profiteered from such a kind of a rise in the market prices. So on one side, the GST Council has reduced the GST rate. As a result of this, the market price of this coffee or this particular product being sold in the market should automatically have come down. But what the company has done is it has revised the prices upwards and has ensured that the market prices of the coffee has not changed. And this has been the contention here. And this authority has penalized this particular company to the tune of 1.04 crores. And the products that they are selling is a coffee. So consumers cannot be found out now. So this particular contribution or this particular amount of 1.04 crores should be transferred, should be paid to the consumer welfare fund. So this is the gist of the article given here. The next article is in regards to GST on lotteries. Before looking at what is given in the article, certain very important points are this. In case of lotteries, the states will have the right to either declare them as a lawful, or that is legal, or illegal. In case of India, there are certain states which have declared lotteries illegal, and there are many states which even today recognize lotteries as illegal. And in case of lotteries, there are two rates of GST which is applicable based on the distribution or issuance of lotteries. One type of lottery is called as a state run lotteries, and the second one is state administered lotteries. Please understand this, private sector companies are not allowed to distribute or sell the lotteries. Basically, these are under the state administered lotteries. When these are state run lotteries, the GST that is applicable on this is 12%. And if it is a state administered lotteries which can be sold even across the state borders, the GST rate applicable will be 28%. Now, this particular rate structure on the lotteries was discussed and decided in the 17th GST Council meeting. And post that, there has been a lot of discussion with respect to what should be the rate which is applicable on the lotteries. Various states want the same structure to continue. For example, state government of Kerala. And there are various states which are basically saying that some of these particular state administered lotteries are misusing this particular loophole, and they are paying 12% GST on the lotteries that they are selling. And there is a third party which basically says including this particular lottery within the GST itself is wrong. And this particular party is the private sector companies which are involved in the state administered lotteries. They are saying that lottery is an actionable claim, whereas government basically has considered this as a good under the concept of a goods and services tax 2017. So their argument is lottery is an actionable claim is not a good. Hence, inclusion of lottery within the GST itself is wrong. So actually there are three groups here. One group basically says let's continue with the same structure of a GST. Second says no, we will have to harmonize, have only one rate of GST on this. And the third group basically says including lottery within the ambit of GST itself is wrong. And this particular private sector companies have taken this to Supreme Court of India. Right? So basically in case of Supreme Court of India, what they have done is they have claimed that lottery is an actionable claim, and they have basically said that inclusion of lotteries within the GST is not legal. So this particular case is going on in the Supreme Court of India, and Supreme Court of India basically has reserved its order whether GST should be applied on the lotteries or not. This is the basic gist of the article given here. Now based on this, I have given a question. Consider the following statements. Lottery is legal in all the states? No. Some of the states even today maintain that lottery is illegal. Lottery run by and authorized by the state government attracts a GST rate of 28%. Again wrong. If it is run by the state government, it attracts a GST rate of 12%. If it is authorized by the state government, it attracts a GST rate of 28%. So both the statements are wrong. Right option is option D, both are false. The next article is with respect to LTC, that is a Leave Travel Concession. Certain very important points are these. First and foremost, central government employees once in 4 years, that is once in a block of 4 years, will get this particular concept of a Leave Travel Concession, wherein they can travel and the fares, that is to and fro fares for this particular travel will be refunded by government. Right? Those particular employees, the spouse and the children can travel, and whatever is a fare based on which type of employee he is, under what pay grade he basically falls, based on that certain amount of refund will be provided under the concept of Leave Travel Concession. Now under this, basically this particular allowance is given, or this particular repayment is done once every 4 years, and whatever payment is done back by the government, it does not attract any kind of a tax. This is one very important point. Second very important point, very recently Government of India, in order to increase the demand or consumption of goods and services in the market, has announced a Leave Travel Concession scheme. Under this particular scheme, this particular employee, that is central government employee, is allowed to purchase white goods, that is basically electronic goods in the market, which attract a GST rate of at least 12%, and this particular LTC which they are supposed to get will be refunded back to them. But the catch here is whatever is the LTC that they are supposed to receive back, they will have to spend 3 times this particular amount in order to get this particular the LTC refunded or provided back to them. So this is the cash voucher scheme which has been introduced by the government, and under this particular LTC scheme the payment of a cash allowance has been kept at 36,000 rupees per person. So these are some of the very important points related to LTC scheme. But what is the update here? Update is earlier, whenever this particular employee is supposed to purchase this particular white goods which attracts a GST rate of at least 12%, the billing was supposed to be done in the name of the employee himself. But this particular condition has been relaxed by the government. Now the employee can purchase this particular commodity or a good in the market, and the billing can be done either in the name of a spouse or their children. Even that particular bill will be accepted by the government to provide this particular LTC cash voucher. So this is the information provided in this article based on the LTC. The next article is with respect to imports and exports. Now in the month of September, for the first time after 6 months, the India's exports have broken this particular continuous trend of a declining and had registered a 6% increase. But again in the month of October, it has registered a decline in the exports by 5.4% compared to the same month in the previous year. Now in addition to this, the information that has been provided here is the outbound shipments, that is basically exports, have declined to 24.8 billion for the month of October year on year, after a brief increase in the exports for the month of September. Not only this, for this particular month, even the imports have also declined by 11.5% year on year, and the total value of imports for the period from April to October have come down to 1.82.29 billion, which is around 36% lower compared to the same period in the previous financial year. In addition to this, the overall exports for the first 7 months in the current financial year have amounted to $150.07 billion, which is 19.1% lesser compared to the same time period in the previous financial year. Now, what is the importance? Well, you are supposed to know these particular data. Do not mug up the data, but what is the importance of the data is in its implication. And the implication are, one, when imports into India contract like this, it simply represents a decline in the consumption demand in the market. And what we want right now in case of the domestic market is increase the consumption of goods and services. Because generally decline or decreased consumption of goods and services represents either a slowdown or a recession in the domestic market. Second, with decline in the exports for the month of October, after registering a positive growth in the month of September, it also shows that the recovery that is happening in the global economy is very, very fragile, or there is no guarantee with respect to what pace, how much recovery is taking place in the global market. And the importance of the exports from Indian economy are in multiple ways, right? The most important aspect related to more and more exports which are supposed to be done from the Indian market to the external market is it will revive the economic activity in the domestic market. Not to forget the creation of employment that is going to happen because of more and more exports that we do. So these are some of the very important points which are given in this particular article. So these are some of the very important articles and the questions related to these particular articles for this particular time period. Thank you. Have a good day.